Hi everyone, Drini here, and welcome to my channel. So while Bitcoin and the rest of the crypto markets haven't really done anything significant over the past couple of months now, sentiment in the market really is split half and half. So you have a lot of analysts who continue to remain bullish, but you have also a lot of analysts that are already signaling capitulation. And if you're active on crypto Twitter or if you're active in the crypto news when it comes to YouTube, all of these influencers make it appear that a major capitulation is coming. And when it happens, it's actually the end of the world. So what I'm going to do here is I'm going to show you that even in the event of major capitulation, it is actually not as bad as you think it is. So let's dive into the charts just to see what I'm talking about. So before we continue with this exercise, I'd just like to lay down a few assumptions here. The first one, of course, is the simulations and the scenarios that we will map out for Bitcoin would be also a proxy for good projects in the crypto space. Because remember, not all projects would rise up with Bitcoin once the crypto markets recover. So if you have a lot of money in like most sketchy projects, anything that starts with crypto-blank, then I cannot vouch for you. The scenarios that we will be mapping here would be for Bitcoin and good projects that correlate highly with Bitcoin. So the first thing that we really have to look at is we need to look at Bitcoin on a monthly time frame right here. And we have to operate on a very deterministic fact that Bitcoin and the crypto space is still very young, so it trends up over time. We are barely below 2 trillion, whereas the rest of the asset classes in the world, gold is 10 trillion, the stock market is 100 trillion, property is 100 trillion, etc., etc. We know that the whole space just trends up with time for now. So having said that, when I go to lower time frames, such as the weekly time frame, a lot of people are scared of this scenario right here or this scenario right here. But when we actually calculate the worst case scenario, when you have a long time frame and you're putting in money that you can afford to lose, even a capitulation period such as this is not a bad situation at all. So let me demonstrate. So let's assume that we have a major capitulation moment right now. So let's say that after this week, we finally get that major capitulation, very, very similar to this capitulation back in 2018 right here. So let's say that the current level where Bitcoin is at, this level right here is your average price for your portfolio. So let's say that you've put 10,000 right here during this particular period. And this is the average level that this portfolio refers to. If we have a major capitulation to the downside, the first thing to note is your portfolio will now go down by 37%, or maybe if we maximize the levels here, it will go down by 41%. So your 10,000 is really now worth 4,100 right here. So the first thing is, should you panic sell in the first place? So if this capitulation candle happens and you get caught with your pants down, should you panic sell? Well, the answer is no, because if you look at the range between these levels, so when the capitulation candles happen, if it's a very sharp downtrend that's very, very quick, what tends to follow is a long sideways action before the eventual rise again. You might as well hodl through it because what's going to happen is you're just going to experience sideways action before eventually breaking even once again and going back to the upside. The other thing to note is if this capitulation would very closely mimic the 2018 one right here, you would also have 175 days to beef up your portfolio with the prices that are now here. So let's say that from here you had 5,000 to spare during 6 months. So let's say every month you'll be putting 1,000 to 1,002 or whatever amount that you can put in here. When a capitulation event happens, what's going to happen now is you will have two sets of portfolios. This initial portfolio where the value is now 4,100 and this portfolio right here where the average price, let's say, is around this level right here. If you do not panic sell and continue to hodl this 4,100 while continuing to add on to your position because you know that we are in a bear market and the bear market is really the best way to accumulate before the subsequent rise up again, what's going to happen to your portfolio is upon break even, so after 6 months, this 4,100 will now go back to $10,000, while the 5,000 that you initially had from here to here would have already netted you a 50% profit from here. So your 5,000 has now transformed into 7,500. Overall, the amount of money that you've put in throughout this whole period right here, you have already profited by 2,500 had you put in 15,000 in the first place, had you continued to add to your positions, because we are not at the levels where we are supposed to sell. So the second thing to note is, if we were to capitulate, let's say we go down all the way to 23,000 right here. The next leg of the bull run, when we overlay the Fibonacci, where the all-time high of 69,000 and the all-time low here of around 23,000, the 1618 extension of this particular structure is 137,568. When that happens, remember, you put in two portfolios here, two sets of portfolios here, where this 10,000 is this price, this 5,000 is this price. Your portfolio value from here all the way to 137,000 Bitcoin, your 10,000 would already be $24,000. So you have 24K right here. And your 5K all the way to $137,000 would already be $20,000. So once we reach the 1618 extension, assuming this capitulation right here, your total portfolio value would be $44,000 from the initial $15,000 that you've put in here. We're only looking at Bitcoin, where Bitcoin, because of its high market cap, doesn't really have a lot of multiples. If you add on some of the layer ones that are highly correlated with Bitcoin, the multiples will be much higher, because your portfolio of 10,000 is not just split into 100% Bitcoin. It's going to have some layer ones here, some gaming cryptos here, some other projects that you feel are interesting, some DeFi protocols, for example. So the moral lesson to all of this is, regardless of what's happening in the market, regardless of what's happening, whether we blast out of here or we capitulate down, at the end of the day, if you're in it for the long run, as long as you stay in the game, you will be rewarded significantly. Even if you bought at an all-time high right here, the people who bought at $20,000 back in 2017, had you been patient, or had you continued to hodl, and if that person continued to accumulate, bringing his average price down. So for example, if it kept accumulating just DC8, 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 eventually his average price, let's assume, is somewhere around here at around 9,000. His current profit for his portfolio for Bitcoin is already at 300%. This is why there's a very, very important saying in the investing space: time in the market beats timing the market. It actually really doesn't matter whether we capitulate significantly here or not. At the end of the day, if you keep holding on to positions, if you keep investing in proper projects and not just anything that promises 1,000 gains from some moon boy influencer, then we will all be fine.